characteristics of these markets, whether it is money market or capital market. Finally, I want you to at least explain the difference between money markets and capital markets. Of course, there will be other areas of interest, such as there will be other areas that maybe you would like to know on these markets. I think I'll bring them by the end of the lesson. So by this time around, I think we are targeting now these markets. Let me first of all define what are financial markets. Let's look at the definition of financial markets. That is market or financial markets. Definition of financial markets. By the way, an ordinary definition of a market. A market is where you buy and sell. That becomes a market. You get that issue on the market. That where there is a market, there is an issue of buying and selling. So when you look at this big financial market, in other words, there is an issue of buying and selling securities. So we are looking at the issue of buying and selling securities. That's why we are looking at this as the financial market. You can ask, what are those securities? What are these securities? So the bonds again, the treasury bills again, those equity shares, those are examples of the securities. Therefore, when you look at this financial market, we can define it as markets that are in line with the securities. In other words, you buy financial assets. I think I have to take notes from that. I think I will not be able to do that. So, an example of items or transactions that are being traded as financial assets are as follows. So, example, we are looking at example of things that are being traded on financial markets. Example of transactions. Transactions traded. Example of transactions that are traded on the financial market as follows. One, you look at in other words, these are referred to as financial assets. Transactions which are referred to as financial assets. Financial assets are as follows. One, you look at stocks. Look at bonds. Look at commodities. What? The derivatives. And sometimes currency. Financial markets. So I look at these examples of transactions or financial assets. But where are these being done with these financial markets? A good example of these financial assets, they are banks. In banks, it's a financial asset market. And again, these bureaus, we call them, which bureau? We call them where you buy or you exchange currencies. What do you call those bureaus? Forex bureau. So you have got this market I call forex bureaus. Bureau. whichever banks that you know, they are referred to as financial markets. Financial market, because in the bureau is where you buy and sell securities, or you buy and sell, or you trade securities in form of financial assets. The examples are these stocks. And again, financial markets, apart from banks, bureaus, again, stock exchange. Stock exchange. In the stock exchange, there are financial markets, because it's where you can buy and sell financial assets in stock exchange. Example of MSE, Malawi Stock Exchange. So I'm looking at it, Malawi Stock Exchange, MSEs. It's a financial market. Right? If you look at the stocks are sometimes known as equity shares. They are equity shares, ordinary stocks, shares that you buy from the Malawi Stock Exchange, which is referred to as the secondary market. So, stocks, you buy them from the Malawi Stock Exchange, of which the primary purpose is to sell and then receive where you can buy shares. So we are looking at the stocks, because you get them from the Malawi Stock Exchange. And you look at the bonds. These bonds can be government bonds, ordinary bonds. So these bonds again, you can get them from banks. So government is able to buy or sell. They can buy these securities in the form of bonds. And we have got commodities, derivatives. Examples of derivatives, they are the swaps. You have got the futures. You have got the options. Those are the derivatives. So talk about a derivative. Again, they are instruments. They are instruments that you agree to pay at agreeable time. For example, if you are selling a car, we can come up with you can bring an instrument, we can decide, pay me at a later date. Those become the options, or they can be the futures or options. It depends. You pay me later, and you can use this car, but you give me money later. That's an instrument. That is the derivative. You buy it, we agree, you pay me now. Those are derivatives. Swap. You can swap, or you can use another period of time. Those become a financial asset. And then you have currencies. Like if you want to exchange, if you want to get a dollar, or you want to have exchange a dollar to one, those are currencies. So you use those ones, those are referred to as financial assets. An asset is something that you have, want to start business with. So you come up with those currencies. So you have the currencies, the derivatives, commodities, bonds, and the stocks. Hopefully, I think we will be defining them in due course, or we'll be defining them each term in bits and pieces, and so that we should be able to understand what we mean when we say bonds. What are examples of a bond? What is an example of a derivative? So we'll be able to talk about these like bonds, buy and buy. But what I'm trying to take you to, that in financial markets, where you have got bureaus, banks, and the Malawi Stock Exchange, is where you have what are called the transaction, you can transact financial assets, where there is a process of buying and selling. So examples are those ones. Now, out of that, what are the major purposes of financial markets? Let's look at purpose of this financial market. What's the purpose? The major purpose of financial markets is to set price global trade. So one, set price for global trade. Two is to raise capital. Raising capital. And three is to transfer liquidity and risks. Transferring of liquidity and risks. Right. Let me just explain this purpose a little. Setting of price for global trade. Like financial markets. They are there to set price for global trade. Global trade. They do set price. That's why you find that if if they are trading dollar, everywhere the price will remain the same. That's because of these financial markets. They agree globally. You find that the wealth of a dollar in Malawi can be the same as the wealth of dollar in the United Kingdom, whichever. So it's there to set the price on global trade, so that dollar is traded equally in the United States, equally in Canada, in Malawi, in Australia. You find that the dollar, the only difference are the currencies that they are using their own currency. Here in Malawi, they are using Malawi price. But the price on the global market is the same. That's why that is being done by financial markets. It's being done by the financial markets. Again, raising capital. Financial markets are there to raise capital. How do they raise capital? They are raising capital, for example, if they are selling companies like Airtel or KDM through Malaysia Exchange. They are there just to raise capital. Maybe they have known that the capital is something which is not equivalent, is not sufficient to run the company. That's why they are there raising capital. Again, transfer of liquidity and risks. The way the liquidity, transferring of liquidity and the risks, they are there to transfer liquidity because there are other items which can be changed into cash. So the banks or these financial markets are there to transfer liquidity wherever possible, and at the same time transferring of risks. They are there to transfer. They are there to take risks on your behalf. They are there to take risks. They are there to transfer risks on your behalf. So these are the major purposes of financial markets. If the moment you are keeping money with these financial markets, or you are making whatever there, just so that you have the issue of transferring of liquidity or risks. The banks are able to say the risks are upon us. So that is about the purpose of these markets. Before I proceed, maybe you have got something that you have to understand. Maybe there is something that you like to understand from there where you have been said, but there I am not clear on this. What are they? What are they? Derivatives. I'm saying examples of derivatives are options. They are options. They are swaps. They are futures. Of derivatives, you can agree, Mr. Skaza, I have a car. Let's say a deal. You can do the futures. Say, let's say you will pay me, or you will pay me in December, you can take this car, pay me in December. Those are what I call futures. Those are transactions that I will do that in a future date. That becomes the future. To you, when you have done that transaction, to you have got money. You have that money on such a day. You can be happy that no, I think I will get my money. I will have my money in December. But you can give me the thing I can use it. That's not the future. We have what I call the swaps, where you can swap the options. You have the options in the swaps. All those are examples. We look at that. The options is just the contract to show that at any time until the expiring date, you can have that contract. You can say, I think the options is a contract that I will get my money by such a time. We agree before the expiring time, I will get this money of mine. So that becomes an option. So it's a more like a contract where you are exercising your right, your power, that you get your cash until or within the date before the expiring date. Between the expiring date, that becomes an option. It becomes an option. Right? There is another one which we get it immediate. Immediate. You just get it immediate. I think that again is on there. But we'll look at some of that. Now, therefore, the definition of a derivative is a security, an instrument. So we can just define a derivative as an instrument. Both are instruments. So it's a financial instrument that is used or whose value depends upon or derives from the value of the investment. In other words, it has what is called the investment vehicle, which it is to do with it's an investment vehicle. A vehicle it carries, if it is an option, if it is a swap, it is taken in a vehicle. We call that one an investment vehicle. Because when you say you pay me next year, you pay me by December, you pay my money by December. From this time up to December, it means that is an investment vehicle. It is in that one, it moves until it reaches that particular day. So there is that investment vehicle until the period of time. Therefore, there are two major types there are two financial markets. The ones that which are commonly known, there are two financial markets. Now let's come to types of financial markets. Types or kinds of financial markets. Financial markets. So we have got two. One, we have what is called money market. Money market or market. And two, we have what is called capital market. Capital market. It's where prices are set, it's where capital is being raised, it's where there is a transfer of liquidity and risk in these two types of markets. Money market and the capital market. It's where now we have to understand. I'm saying all these markets, they are financial markets. They are financial markets to do with the money, financial security. In other words, the good way you have to say it is to do with the securities. Financial transaction form of they are referred to as security. Securities. Whatever we are handling here, whatever we are discussing here, whatever we are talking about security, financial security. Why security? The moment you have them, it means you are secure. There is security. The moment you put them there, that's what goes with financial security. So we have got two types of markets. We have what is called money market, and we have what is called capital market. So we have these types of markets. Now let's look at what is happening in money market, what is happening in the capital market. Remember, within these two, all these two, these things are found in money market and capital market. Bonds, derivatives, commodities, currencies, everything, stocks, they are happening in money markets and capital markets. Now let's look at what is happening in money markets. What are the characteristics of money markets and what are the characteristics of capital markets? Now let's start with the money markets. What is happening? What is happening at the money markets? Money market. Let's start with money market, guys. What am I saying? What are you saying about this issue? I may talk and talk, but maybe something is not coming into your head. What am I talking about in this market? Joshua, what comes to your head when I'm talking about this financial market? Because we should be able to understand. What are you talking about? It might be that from the time I started preaching up to this time around, it hasn't been gone into your head. I am just solving this in water, in a rock. Even Jesus came up with a parable. Someone had to sow seeds, but then he sowed them on the bare ground, others in the rock sea. He sowing seeds on rocks. What am I saying about this? What have we read? Yvonne, just tell me what have you read about that?